I bought this t-shirt shortly after I set my foot on fire with my plasma cutter. We were in school. We were taught that you have several states of matter. You got a solid, you got liquid, you got gas, but there's also plasma. And plasma, the best example of plasma is the sun. Matter becomes plasma when it's very, very hot. So my plasma cutter generates up to 10,000 degrees Fahrenheit. And so I was out welding and didn't have my proper shoes on, actually plasma cutting. And since I have diabetes, I don't have good feeling in my feet. So I am cutting a sheet of metal, and suddenly begin to smell something, which my sock and foot on fire. Not really funny at the time. Now it's 3 months later, and my foot's totally healed, so I can be a little bit humorous about it. But it taught me to put on the proper clothing when I was doing anything with steel, whether it be welding or cutting or grinding or whatever. Better safe than sorry. Okay, now to the main topic, which is this is Friday, February the 24th. I have 24 options that I've sold that will expire today, which means by the end of close of the market today, they will either be exercised or not. At the present time, it looks like they will be exercised. The question is, what will the market be? I'm really have mixed feelings about it. I don't like to see HBI go any lower, because it becomes a real takeover target. Somebody to take it private or another company to gobble it up. It's a great brand and old company. Been doing it for decades, so there's a lot of expertise there, a lot of plant and facilities and marketing and whatnot. So if it gets too low, somebody's start buying it up, in which case the price of the stock could jump quickly. And remember the prayer of the option seller: please, not too far, not too fast. But that aside, if it goes down, if it closes closer to $5, then I'm very likely to be able to, I should be able to sell a 550 call. With a good premium. I'm going to be able to sell a 550 call. It's just a question. I need to get 30 cents or better. So that's the main thing I'm looking at, because 30 cents plus 30 cents makes 60, and I got a $6 call and $6 put and a 550 call. So that's a 50-cent spread, but 60 cents will cover it with a little profit to boot. And free cash flow is even better than that, but will not be determined until I have to replace the stock with another put. Okay. I think that's cover that. So it'd be a matter of just watching the market today and the tug of war around these steps or increments in the options have a lot to do with the overall market. In other words, the 50-cent increments, the support levels tend to be on those 50-cent increments. So usually what you do is you see a tug of war between the buyers and sellers at the closest increment. So we'll see if that holds true. The whole market's in decline. Most people just haven't accepted the fact that we're going to have a recession. There's still a lot of money floating around out there in the ether. And until that is liquidated by the market through lower prices, and people selling at a panic, that money's got to go somewhere. So that's, of course, maybe that's helping me right now. Probably is. It's helping me keep the premiums relatively high. Think about it. A 30-cent per share premium for 5 days on a $6 stock. Damn, that's pretty good. So I'm not going to complain, but I am watching the daily sales volume on HBI stock. And if it gets substantially above the daily average, then I'm worried about somebody coming in and doing a buyout, or at least trying to take control of the company. We'll see. Anyway, don't want to take up any more of your time this morning. I hope you're making some money and doing well and not in a snowstorm somewhere. All right. If you haven't subscribed, please do. If you like a particular video, please click on like. It helps me direct the direction of my videos. With the subscription thing, it's a pretty big deal. I've got a long way to go before I get 1,000 subscribers, which is my goal, of course. So your help would be appreciated.